What is up, guys? Happy Sunday. Welcome to Market Kickoff with Nick4ATick. What is going on with my camera right now? I'm like weirdly cut off. I think this got bumped. You know what? We're going to make it work because I'm not going to screw around right now. I'm not sure what's going on. We'll fix it. That's close enough. Anyway, how is everyone doing? Audio, video, everything coming through, minus whatever's going on with my camera cropping for some reason. I don't know what's going on there. How was everyone's week? How was the manic 4-day week to kick off January officially? It was pretty volatile. I don't know how you guys all did. I was in a bit of a drawdown last week, did not trade well towards the latter half of the week. Made some mistakes, made it up in options, which is never a good thing, in my opinion. If you're saving your week with the 0 DTEs, it's not a good thing. That's not exactly how I want to trade. I want my futures trades to kind of lead and the options to be a little more fun and, you know, other opportunities that we actively can kind of take to express the same type of perspective that we would maybe in ES or in NQ with triple Qs or with SPY, but unfortunately for me, I, for some reason, just could not seem to catch a decent trade. I guess it's a loaded question because both are not loaded question, but it's I guess an over trading mistake that I made last week where whatever days I hit Club DLL, I was actually up $1,000, $800, $1,500, and ended up giving it back, turning red, and then spiraling from there. So sometimes that is what it is. That's just the way the week turns out. I know I have better green weeks than typically that. So we'll recover this week. This is the first full week of January, if you can even believe it, almost in the middle of the month already. And this is the first full trading week I think we've had in about a month. So I'm looking forward to a full 5 days of trading this week rather than, you know, every week for the last month. Basically, we've had a holiday in the middle of the week, you know, Wednesday or Thursday, it seems. So it'll be good to kind of see true volume be here and, you know, how we kind of go from where we closed. If you weren't paying attention for the last week, more or less, we closed near the lows, and this is pretty much a wild week. If you guys remember last Sunday, we were talking about closing near the highs, and there was a chance we could go back up towards 6080, 6100, I think was the other target I was talking about, but we rejected off that, and what we have is kind of a triple distribution of a week where we closed down near the lows. If you guys remember last week's weekly pivot was right around here between 59, 50s area, 55s, whatever it was. We kind of were boxing, you know, about a 5-point range, but that held true as far as providing a decent trading opportunity to the downside. You know, once we did finally break it, but it did give me confidence, which is why you do prep, why you kind of, you know, have levels predefined of areas you're not necessarily interested in interacting with, but that can give you a perspective where if this is lost or this holds, we probably are going to continue higher or continue lower. definitely chopped around my weekly pivot, which does give me confidence in saying it was a decent level to, kind of lean into like I did, not necessarily did, but at least provided opportunities either way, as you were looking at it as an area that we were going to consolidate, provide resistance, and then make a decision, which is what you want a weekly pivot to be. It ain't giving you a long here, short here type of, level. The logic is, what does price action do when we interact there? Do you start to see sellers step on the gas? Do you see buyers continue to defend and start to make a move higher? When either one of those tends to happen, it's when you can then lean into potentially a longer hold of a trade, because you have broken down a level and you've lost support, or you've held support, and you're going to go find the next area of support or resistance in theory. So that's kind of how we use the weekly pivots. And for this week, heading into the first full trading week of January, I'm going to lean it a little lower, back down towards the 59.30s to 59.25 type spot. This is the last 2 weeks of, value area lows going back to kind of the Christmas week. And even looking at this from a longer time frame, this is, the last 3+ weeks going back to kind of the FOMC dump. That is the value area low as well. So if sellers are going to continue to defend and move us down even further down the elevator shaft into this violent January that we just seem to be in, they're going to need to defend and reoffer somewhere in that 59.30s type area to move lower. In the event we do move lower, where should you be looking? Well, it's going to be this election night low down here, basically between kind of the 58.30s all the way down to 5800. 58.15s is probably the spot I'd bet on for buyers, maybe even down to Hoag's weekly kickoff level here at 58.12s. But it's very possible if we go target that area going back to November 6th or 5th, whatever day the election was. I can't remember anymore. It's very possible that these levels may not hold in the first touch. So what I mean by that is you're probably going to get it. It's probably going to get taken out. We may even dip into 57, 57.90s somewhere before, if you really did find buyers, they may step in to push us back up. When you get to these other areas, yes, it can absolutely blast down through, but more than likely, if it is going to be defended, since we had so much volume and it does have resistance going back even further into October and the end of September, the likely thing would be it creates an excess low and we push back into an area of value. So that would be kind of what I'm looking at in the early part of this week. Is I kind of expect this to be taken out. I don't know how low we may go, but before we really move higher, I would expect, maybe a retest of 59.30s, and possibly do we break this low, make an excess low, and then kind of consolidate there until there's new information. I think going into Friday with kind of that violence that we saw to the downside, to the rebid, and then a sell-off towards power hour once again, or in the latter half of the day, all bets are off. I'm really trying to go into every session this week without really a bias, with a plan for both directions and, where I may want to interact. Because, as volatility has ticked up the last couple of weeks, you kind of need to. You need to have your head on a swivel. You can't really get too in the weeds with one specific direction or bias, because the market will slap you. And I mean that very much to both directions, because you saw it on Friday where we had, I think, 2 violent V-shaped recoveries to the, back up. Before we were sellers were reoffering and sending us back down lower. It was great volatility if you're a trader, but if you're not paying attention, or you're holding trades too long and you don't see profit, take profit, you can get blasted the other direction. So, holding out for the next bull run back to all-time highs intraday is a mistake with seeing sellers on the tape the way they've been. And yes, absolutely, they can get blasted, but we saw on Friday, multiple attempts to kind of reestablish back in an area of higher volume was rejected a few times. See, just like Friday, we kind of came up, started trying to get back into, the value area from that week, and we sold right off before we even got the opportunity to. So I'm taking sellers seriously. If you guys remember what I said last Sunday, it was talking about, I wanted to see sellers this week really show me something. And for them to do that, they, remember we were trading up near the highs somewhere around, I think around 6,000. I think 59.90s is kind of where we opened during Globex last Sunday. And we kind of were off to the races. And I said, my weekly pivot's going to be a little lower to start this week. I want sellers to really show me something before I'd get too bearish. So that's kind of the ES plan. As I said, one of the things to look out for is this election low back down towards 5,800s. I do expect it to be taken out if sellers continue to show the enthusiasm that they showed last week and moving us down lower. We'll talk about what I'm seeing on the options chain too. There is a big glaring round number at 6,000 on SPX. That's still the highest, volume of gamma that we are seeing. So with that, you have to keep your head on a swivel for if people start getting too bearish and, it's not the end of the world, we're probably going to rocket back up based on what we're seeing with options activity. So that's a very bull-sided, plan for ES. And that's kind of the way it should. I would expect, with all of this consolidation and weakness we've seen since FOMC, yes, we could continue down lower, but it doesn't take much to get people all bulled up again and, with options and everything else, sending us back higher. So it's just something to keep in mind. When volatility ticks up, the face rippers that you get in conjunction with these violent moves down can really catch you off guard because you almost don't understand how fast, like you go in to start reoffering something and then you just get absolutely blown out like I did on Friday where I reoffered probably about 20 points too early and then took the same trade with the triple Q options and shorted it back down. So we can have a plan, but with the VIX ticking up back above 20, I mean, the moves can get pretty wild. So just be careful this week. As always, like we like to say, when vol ticks up, when things are a little crazy, when prices moving too fast, when NQ's got a couple points spread, it makes a lot of sense for most people to size down, widen your stops, trade micros, or if you're an NQ trader, maybe move to ES this week. It might just keep you on the right side of a trade and not, get you stopped out or get you in the wrong position at times. So, and as always, guys, if you have questions as I'm going through everything this evening, feel free to throw them in the chat. Andrew or myself will start grabbing them and make sure we can answer them here before we get to the end of the show at the top of the hour. So I'm going to jump to NQ before we get to the Globex Open here. Very similar distribution that we saw on the NASDAQ. If you guys remember last Sunday, I think we were trading around the 500s. I said I really didn't want to interact with that specific level. It was just going to be choppy, and it kind of was until the early parts of Monday's session where we shot all the way up past 800s and then failed, prior to making kind of that 21,900s. I actually thought we were going to hit 22,000 as we were kind of ripping to the upside, but then we continued to sell off. And then continued to make the move down lower. So just like with ES, the same plan is true. The area to watch to the downside is going to be all the way back down towards 20,300s to 20,400s. It would be kind of the area if we get continued weakness. Honestly, I know that's 600-700 points, but the way we move, the way we were on Friday, I mean, 600-700 points is nothing. So it just takes a couple violent days, just like we've been seeing, and that election low could go get retested. So I would expect same thing. I kind of expect it to at least be retested. I'm not saying we blow through it, but it's something to keep in mind. If bulls kind of start off strong, the same area we should be watching on the NASDAQ for a reoffer is going to be back down here towards 21,200s, the low 200s to 250s. You could reasonably expect sellers to step in and potentially reoffer there. If they don't step in, we probably make a trip all the way back towards the 350s. And then from there, you kind of get back into that chop area that I was talking about last Sunday, back in kind of the 450s to 550s areas on the NASDAQ, kind of the previous week's high. And if we take out that, obviously back up towards 800s, and we kind of could do that full value rotation here from the last few weeks. where if they don't reoffer here at 21,200s, it's reasonable to think we may go retest the upper end of value up here towards 21,800. So that's kind of the gist. That's kind of the NQ plan. Same thing is true. They were trading very much in correlation last Sunday, and we are wild open thus far. We are open. Welcome. Happy Sunday. Globex is back. NQ starting to just kind of melt down slowly. Got 50 points already. Good God. If anyone is already trading this, Godspeed. I'm sure it'll settle down. No gap. Or maybe it was a gap and already closed. So, NQ moving down way lower. We're going to hang out and watch this for a minute or so. That is in the first 40 seconds, about 80 points on the NASDAQ already moving. So Godspeed. The spread looks thin. This is ones and twos and about a 4 to 6 point spread thus far. Good grief, man. And apparently CL has ripped 70 points to the upside. And NQ already back up another 40. So if you are trading this, dear God, please use stops. You're going to get hit either way. My advice would be let it settle down for a few minutes. There's no reason to trade this. If you are trading this, do not trade this in your real live account, your personal account. If you're using a sim and you get sim fills, I mean, Godspeed. That's awesome that you get there if you get a good one. But guys, do not put capital at risk right now. Let things kind of settle in, for the love of God. Let's jump over to CL, since apparently it ripped about 70 points already and it's continuing its march all the way up towards $78 a barrel. Gotta love it. Gotta love breaking out of a range. And remember what we said going back, I don't know how many, 2 weeks ago when we had this, when we were still at the top edge of this range between 71 and 67s, we had talked, and this is a truth going forward for, anyone in their trading that's still early in their journey. When you get multiple weeks of consolidation and balance, like you saw here in Crude, this is a very good example of once balance is finally broken, do not fade that move. Go with that move. It's as simple example as this. Like, this is the easiest, swing trade potential opportunity that you'll ever get when you have that much consolidation. Obviously, yeah, you could have been stopped out. There could have been a reoffer somewhere, but the logic is when you break balance like that after multiple weeks, after multiple months, you should be with that trend. And that's where, like I said in my, one of my goals for 2025 is to be swinging some micros for situations like this, where once we kind of peaked above 71, there's no reason I shouldn't have been, long and Crude in a few micros and just kind of see what do we get that full move back to those highs, going back to the middle of the summer. I think that we started talking about if we ever did break this trend or break this range where we may go. So that's the example of why you don't fade that final break of balance. You really need to wait for sellers to show us something. And in this case, there's no short in CL unless we break, honest to God, back inside 73s, 74. I would not even be looking for a short. I'd be looking for dips to buy where sellers came in, they push us back down, perhaps even to 75s, 74, 60s type area to potentially rebid this for that trip to 78. If we don't obviously get it taken out here in the early part of this week. I have no interest in shorting Crude right now. Absolutely not. Once again, the breakout of that range, you kind of go with it. You as we're getting to the top of that profit target, obviously we could keep going as high as, probably 80, but this is where you kind of look at that old high from the summer and you peel off. You take the bulk of the core of the position off. Maybe you hold a runner for 80 or something, but you need to be ready once we've kind of taken that out in theory to potentially cover the rest of the position if it starts falling back into range. Where you got a good swing trade there, you might as well cover it. So, as always, you could short Crude. There's definitely going to be intraday opportunities, but I'm talking from a swing time frame, which is what you look at a break of balance to really mean. Is you kind of want to go with that trend. I don't know how long it's going to last. It could end this week. We could tag 78 and fall back into balance, back inside 70s for all I know. But that is what you don't do. You don't suddenly it makes a push to 73. You decide I'm shorting this back to 71, 67s, whatever it is. It's just not the way you kind of look at a break of balance. So just wanted to talk about that. You're free to trade however you want, but that is almost the full range of that breakout trade from 71 to 78. So it could continue to go higher. Obviously, who knows? With everything going on in the world, crude could hit 100 again like it used to. It could go negative. Who knew it could go negative, but it can. So you guys trade as you will. But for me, if I was swinging this, obviously, yes, I'd still want to be long, but I'd start covering if I was kind of in that 78 range, because you may reoffer and then we could be in a new balance range somewhere between 78s and 75, 74s. So that's kind of how you have to think about it. The core of your position, in theory, if you took this trade or you were long crude, I'd be looking to cover in those 78s. Someone wants me to look at natural gas. I have not looked at it on an hourly time frame. Jesus. Oh, natural gas with a hell of a gap up. Look at that. Look at that. All the way up of, I don't even know how natural gas is measured. Is it gallons? Cubic something? I honestly do not know. But that is a wild gap up. So the energy trade is on to the bullish side. That is crazy. Yeah, this is the Widowmaker for a reason. That is crazy to see. I have never actually traded natural gas. I mean, I just need to get better about learning, watching other instruments here and there. Natural gas doesn't have micros, and it does move like it's been in an insane asylum, and it has an axe to grind with anybody that trades it. It's called the Widowmaker for a reason. I've always wanted to trade it. I just don't watch it enough. From let's call it an hourly 5-minute candle perspective to ever have the balls to actually trade it. So it looks like the energy trade may provide some opportunities this week, and as will equities. When volatility is here, I mean, there could be a lot of natural gas is in millions of BTUs. I knew it was something like that. That makes sense. But yeah, that seems like there's going to be opportunities in everything. When the VIX is high, and now we are, the NASDAQ falling off to 20,900s, 950s, ES looking to take out the previous week low in this Globex already. Wow. So we have a violent Sunday open here, and I love it. I'm here for it, and so are you guys. Thank you for tuning in, as always. So I don't have a plan for natural gas. It's hard to even think. I guess you'd be looking for something to buy back down, inside of the 4s. Where's that value area low? If you could get something at the 3.7s, that's probably a decent opportunity to long this. But guys, I'm not touching this. I don't watch it enough. My gut would say just look at it. Look for something, a dip to buy if you, God forbid, we're actually going to trade this with size. But there's a spread. Who knows? I have no read on this, guys. I have not been watching this. I do have some natural gas holdings and some long-term stuff, as some USO and other stuff like, in the energy sector, but I don't really trade it that often. Okay, let's jump over to GC, which, just like crude, seemed to break out of this couple weeks of consolidation we were in. If you guys remember last Sunday, we talked about looking in the 2630s to 2620s for a long opportunity. I didn't take it. I hope somebody did and just went long, but the same thing is true. Even if you were late to this, once we kind of broke out above this 2670s area, this old value area high, this old point of control, you started to build volume above it. It's kind of like you got to get long for the trip probably towards the, 2750s to 2800 again to maybe go retest it. But we were breaking out of that balance. So the same thing. There's not a good reason to short it outside of a scalp intraday. Like you really don't want to, but there are opportunities to. But the real trade would be, hey, we broke balance to the upside. You should be long with that trend. And what you need to look at here is, do we come back up and retest last week's high, fail, and maybe rotate back towards the 27,000, kind of this value area high of the last 1, 2, 3, 4, 5 weeks of volume would be around 2,700. So I very much could see that being a trade. Was this the NFP candle? It was. That's crazy. So that's where you kind of would be looking for long. On the short side, I mean, personally, I have no interest in shorting this, but you'd be back up here towards kind of the 27.35s to 27.30s if you were going to short good old gold. But looking at what's happening in equities, you know, if there's rotation out of like tech and other things, you're going to get into more defensive names, you know, some of the Dow names that aren't tech. And then you're going to see people getting back into assets like gold. If there really is that much weakness in equity, they'll start parking in other places. So gold could be one of them. Typically would be when there's weakness. So something to watch out for. This could get continuation and go up here back towards the 27.50s, maybe even back to this old consolidation area. I'm not saying this week, but that would be your target. If you were long in a swing and you were still holding this and you're looking for more upside, that's probably where you cover the bulk of the position again, and then maybe hold some runners for a new all-time high in gold. Maybe we get a good old-fashioned air horn for gold in the coming weeks. But we'll see. That's a pretty bullish move out of that consolidation. So all right. What is ES doing? Still hanging around the lows? Yes, it is. Did we take that out? No. Last week's low is 58.45 and a quarter on ES. So in the early parts of Globex here, that is a level to watch. Do we take it out and do buyers potentially step back in? Are we kind of range bound in the early part of this, or do we just start selling? And if we start selling, you guys know where we're going. Probably down towards that election low. So we are back in the start of earnings season. If you missed it, the banks are back, and this will start the brand new cycle that is, I guess, Q1 earnings or Q4 earnings, excuse me, from 2024. So as you know, the banks typically always kick us off with kind of that earnings cycle. I know it's an ever revolving door, but the banks really kick us off from each quarter to quarter as far as their earnings releases. And it's not necessarily the worst time for the banks to report and kind of give us a perspective and hear some of their CEOs talk about liquidity and everything else that's going on and their perspective and how they feel. And they're not going to probably tell us the sky is falling. So look to maybe get their reassurance on some things, how they're potentially navigating the adjustments with the dot plot and the Fed's plans, and potentially, like we were kind of starting to see, maybe even pricing in possibly no cuts in 2025 going forward. We'll see how that evolves. But the banks are back on Wednesday and Thursday. I think that's it. And a couple of the small ones on Friday too. But the big boys are going to be on Wednesday and Thursday. We'll be curious to see what Papa Diamond has to say. As well as, BlackRock and a few others. So we'll see what their CEOs and everything have to say this week. But it's a good time, in my opinion, with the weakness in the market, for the banks to report, potentially provide any sort of guidance, or maybe they're just unloading their bags. We'll have to wait and see and find out. But earnings season is back. I'm sure the Mag 7 will be right around the corner to potentially give us some, decent dip buying opportunities if we do actually get a decent move down, perhaps towards those, 5,700s in SPX, maybe just a little bit lower than that is possible if we actually got a full, let's call it, 7 to 10% down, if we actually are going to sell and reprice in, no cuts and things like that. In the early part of 2025, there may be some good dip buying opportunities in those companies. Anyway, let's jump over to the economic calendar, because if you were a big fan of event volatility last week, you got a lot more this week. Monday is extremely light outside of the consumer inflation expectations and a 6-month auction. The big ones are going to be on Tuesday and Wednesday, when we have a PPI and some Fed members speaking, and then everyone's favorite from 2022 and 2023 and 2024 is going to be the core inflation rate from CPI. So we'll continue to see, is inflation still not as defeated as they said in November of 2023 when Powell and everyone else basically put out their mission accomplished banner, and apparently we didn't really make any progress in an entire year after that. So maybe a little premature from them. We'll have to see, but we do have the CPI report for month over month and year over year coming in on Wednesday morning at 7:30. So as always, do expect some volatility. Do expect your stops to get run. And then right after that, we do have Mr. Lasagna himself, Neil Kashkari, who has always said he likes to use the price of Stouffer's lasagna to measure his perspective on inflation. So I don't think that's the best idea anymore, but that is something he has said before. So we do have Barkin and Kashkari as well on Wednesday, and Williams. Thursday, we do have retail sales, initial jobless claims, Philly Fed, retail sales, X autos, and there's one more, I believe. Housing index, business inventories, 4-week and 8-week bill auction. Yeah. So the big ones still gonna be retail sales and Philly Fed manufacturing. And then finally, going into Friday, we do have building permits and housing starts. And yeah, that'll be it. So long, wild week of more data releases. So yeah, head on a swivel this week, guys. If volatility is up, it's going to be here for at least this week, perhaps even to the following week. Until maybe the banks report, I could expect that, we may get some wild price action. So do be careful this week. There is a lot of event volatility in the mornings that could provide trading opportunities, as well as provide somebody with an excuse to say, I wish I never traded today. Let's see. On the options front, if you guys remember last week, I think the big strike was 5,900s that we were seeing as far as net gamma exposure. This week, it's going to be 5,800s and 5,700s. So when I was talking about more weakness, that is where you could see some continuation. As always, these can act as, magnets as well as resistance and support. So the big thing to watch, and something that was interesting to me, is, maybe with options expiration at the end of the week, that is why this big round number here at 6,000 is still seeing the level of gamma exposure that it is from a total perspective, from a gross perspective. It's something I'm keeping in mind. If we don't get the sky is falling, type news this week, and hedges come off from CPI, there's no reason to not think, with how bullish everyone still continues to be despite, data and everything else, that we could go all the way back up towards 6,000 and go retest it at the very least, maybe make a reoffer there. I don't know. But with all of that still sitting there, all of the volume that I'm still seeing at that strike going into, January, it's reasonable to think if we get a move up that could very much be a possible target. But there is basically that area that we kind of were reoffering around 5,900s in SPX in, the middle part of last week that could very much still act as resistance. So it may take CPI actually showing progress on inflation, I don't know, for us to get a move up. We'll have to see, but it's pretty wide, I guess is what I'm saying. There's a lot of places we could go. I don't know if we're going to get all the way down 5,700 without news or, inflation being hot or something that says the Fed is not going to continue to cut in 2025. But all of this negative gamma exposure, it matters until it doesn't. As we know, when it's suddenly not as bad, or, something is positive, or we make a move up, some of this comes off in theory, like hedges come off, and, we have market makers and people have to reposition, and that can cause us to move higher violently. So as bearish as you could possibly get this week, just be aware that a violent move back to the upside is very possible before we continue down, or anything else that could happen. So just keeping you guys in the loop. That is what I'm seeing. This glaring number at 6,000 still concerns me. If you are trying to sell this thing to zero, you may want to pump the brakes. That's all I'm saying. So that's the gist. All right. So we're going to go to some questions, but I'm going to do a quick recap of the ES prep prior to us doing that. So if you have questions, if there's things you guys want me to go over, as I said earlier in the show, throw them into the chat. We'll grab them and I will get to them here in a couple minutes. Oh, that was weird. Okay. So ES pivot's going to be around 59.30s. I am basing that off the last 3+ weeks. Sorry, from basically the FOMC meltdown and the last 2 weeks of value area lows here. I want to see, do sellers reoffer in that general area, or do we start to build volume above it? If we build volume above it, I would very much expect a trip back up towards the 60/40s, perhaps even all the way up towards 6,100. On the bearish side, if we do get a reoffer or we do get continuation to the downside, I would expect us to go at least take out the election night lows down here towards the 5,800s, perhaps even make a peak into 57s before maybe we make a move back up and consolidate somewhere in that range, kind of back towards the 5,900s down to, basically where we're trading now. Basically the value area low from last week. I could see us taking it out and then maybe kind of balancing in that area. So that is the ES plan. I'm going to get to some questions here. So as I said, throw them into the chat. I will get them. We'll talk about whatever you guys want to talk about, but thank y'all for tuning in and being here this evening. Still early for some of our friends on the West Coast. So I always do appreciate everybody hanging out. I did see Cami Capital in the chat, Mr. Asia Pacific himself. I don't remember where exactly you are. If you're in Australia, New Zealand, wherever, but I don't know what time it is there, but thanks for hanging out, man. I think it's early, or maybe it's the afternoon. Honestly, God, I have no idea. All right, we'll get to some questions. Can you show your volume profile settings? Absolutely. So, my fixed range and visible range have the same settings for ES. I use ticks instead of number of rows. I set it to 4, so that'd be 1 point on ES. If you're doing the NASDAQ and you want it a little more refined, you can do 5 points, 10 points, not 10 points, not 5 points either. I meant 20 ticks or things like that. It just really depends on how you want to kind of look at the data. I prefer to look at it as cleanly as possible, be able to kind of visually see value area lows and things like that. So it's just the way I have it. I have my value area set to 70, and then I keep the colors 2 different ones so you guys can actively see the value areas as we talk about it. So you understand when I say value area low, that means that bluish spots that we are kind of alluding to. So pretty basic. As you get more comfortable, you can just set it to one color or, adjust your settings from there. But that's kind of how I use it. As we've always talked about, we do not spend a ton of time trading in value area lows, value area highs. We tend to gravitate towards higher areas of higher areas of volume. So we could very much boost out of this and make that trip back up towards my pivot where all of this volume is kind of still sitting. So just my pivot's just at the base of that, because realistically, if we get above it, we may just chop and consolidate again before we make a real decision. Hey, Nick, can you show us the 5 indicators you're using? Sure. So visible range, volume profile, well, the link you can ignore. The Topstep levels, I removed some of them, but I like to have weekly kickoff lows and highs from Hoag. I like his secret sauce. It does align with certain things that I see myself. So just having another smart mind that's been in this game a lot longer than me, showing some confluence of levels that I'm seeing in areas of interest that I'm seeing, I think there's a ton of value there. So if you haven't quite figured out how to define your own levels, lean into Hoags. There's a lot of thought put into them, and they make a lot of sense, and they align with a lot of things that I see too. So I do that. And then the previous days, value area low, value area high, and settlement would be kind of the ones that I really lean on. I don't care. I have some of these other ones, parked on other charts and things. So I just try not to make every, my Topstep X platform, like just have lines and lines and lines. So I remove other ones that are just, repeating the same information that I have in other places visually, especially like last week's lows and highs. Like I can see that in the volume profile as well. So it just becomes redundant. And then so ignore the fact that I'm on 1 hour. But I use a 21 EMA on a 5 minute. It just is a good way to make sure, like I can show you, on a 5 minute, a 21 EMA is a good gauge of trend from a, day trader's perspective. Because even if you leaned into it as a way to kind of like cover stops or know where you're wrong, if we start to, maybe get a 5 minute close above this green line, it's a good reason to get out of a trade, but you can also just kind of see it does tend to give you a good perspective of trend. So it just sometimes keeps me honest if I'm fading the trend, or is there an opportunity to potentially catch it in a breakdown because we are starting to close and make a move lower because we closed a candle below it. So it's a 21 EMA on a 5 minute chart is just a good gauge from a, typical day trader's perspective to understand, where is the trend, which direction, am I on the right side of it? And then it does provide some decent areas to potentially interact with. Whoa, what is going on? Uh-oh. Am I still live? Yes, I'm still live. Uh-oh. Let's see. Stand by. Looks like there was an API issue with Topstep X. All right. So apparently, I may not be able to log back in. Let me try on my Mac over here. Okay. Well, I can get in on my Mac, so let's see if it's back. All right, we're back. All good. Hopefully, as always, guys, if you're in a trade and there's an issue going on with Topstep X, if it's a real issue, which it looks like it was, because I just experienced it too, they'll make it right. So don't blow up the chat. As always, I say, sometimes don't trade the Sunday open. Sometimes there's issues. Sometimes there's data lagging. Sometimes things like that happen. So just sometimes be patient. If that's the only time you can trade, I get it. But sometimes it pays just to be patient. We sometimes when we see these bugs, they do occur during the Sunday open. My guess is when the platform provider, the data provider may be providing updates or dealing with updates or something. This is all technology. Sometimes things get pushed over the weekend and you need data flowing for it to actually go live. So things can break. So as always, they'll make it right if there's an issue. It looks like there was. Hopefully there wasn't any issues with any people holding trades and things like that, but it always tends to seem like it happens at Sundays. So anyway, we'll keep going with questions here. You got a little bit of time, so you can throw them in the chat still. Nick, are you only on TopstepTV Thursday this week? Yes, I am only on Fast Markets on Thursday this week. I'm pretty sure that's my only schedule. Yeah, I think that's the only time I am on this week. Got a couple things going on with the newborn early in the week. And then, just kind of the way it shook out this week. So just Thursday for me. Hey, Nick, have a great year with your wife and your lovely twin. I have a question. What number of inflation would you consider positive or negative for the market? I don't have a great gauge on that. My logic would be if we continue to see, I guess that inflation just continues to stall, or anything that's showing, it's starting to creep back up. That would be very negative for the market because it makes it look like the Fed may have cut too quickly with their battle with inflation. But sometimes with that, it's just there's a lot of lagging indicators, and some things are seasonal as well. So I don't know. We're kind of in this weird cycle where the Fed cut and now they're kind of trying to walk back those statements at the same time. I think a lot of the average consumer is still feeling pain and hasn't really seen anything with, inflation changes. And I don't know about you guys. My homeowner's insurance has continued to just go up and up when I got my new premium for 2025. And, you go to the store and eggs are up. And so I get how the Fed looks at it and what they specifically look at, but I still feel like weirdly for the average consumer, nothing has changed. In fact, it may have even continued to go up in a lot of categories that the average person pays. So my perspective would be if we continue to see stagnant reports where it's not really going down, we haven't quite gotten below 3%, 3.3%, whatever it is, that would be very telling. Their job is not done and cutting makes absolutely no sense if the whole point of, raising rates was to defeat inflation. So as I said, I'm not an economist. I'm not really have a hot, perspective on what's going on as far as the Fed's favorite flavor of inflation, core PCE. So my guess is, there'll be all eyes on the CPI report and the next, PCE to really kind of get a perspective on how that fits in with potentially the Fed's dot plot going forward. But yeah, it's tough to really know. So that's the gist. That's all the questions. Are there any more, guys? Anybody else? If not, we'll do a quick recap of the big four and I will send y'all on your way. So we just went over the ES prep. As you guys know, reoffer somewhere potentially in the 50-30s or we build volume above it. That's my weekly pivot. As I said, it's not a long or short signal in this spot. This is what does price do when we get there? Do we start to pierce above it, build volume in this, basically at this point of control from the previous week? If we get above that, absolutely, you should be long. If you start to see sellers kind of defending in this area and we can't get back up towards the 60-40s, 59-40s, 59-50s, then you should be looking for sellers to potentially reoffer in this area for a trip back down towards last week's low, maybe even the election low. Same thing is true on NQ. We're going to be looking to see, do buyers continue to kind of defend the previous week low, check us all the way back up towards the 300s, the 250s on NQ. If not, we are going back down towards the 20,500s. On the CL front, on the crude oil front, wow, it ripped like 30, 40 pips since I even did the coverage. Just long crude. Just get long crude. Look for a place to get long. Maybe 77s even. 77 evens. Holy crap. It can't stop, won't stop. That's right. If you haven't been watching Landman, I highly recommend it. And watching that show and seeing this insane breakout that I missed makes me want to still trade crude. So you should be looking for longs for that trip to 78s, 78.30s all the way to 80s probably. If you've been watching Landman, I think they were talking the ideal place for crude oil is to trade between $78 and I think it was $68. Maybe it was $70. I think it might have been 68 or 66. I'll have to go back and watch, but kind of in that larger, wider range where for producers, for people, for, I guess extracting and things like that, refiners, that's where they like it. That's kind of their sweet spot. I don't know how true that actually is, but hey, they said it on the show. But yeah, guys, I'd be looking for a place to get long with crude. I can't believe I missed this. There's micro crude for a reason. And the fact that, once we kind of broke out above 71s, I can't just throw a couple micros on, even for the laugh, to see like how high does this go. I mean, there's an example of a mistrade, just of an area that, hey, once you break consolidation, you break balance, you get along with it. And here's why. And that's why micros are a beautiful thing for swing trades, just to get you some exposure. You don't have to oversize. You don't have to have a ton of overnight margin because most of it's $1,000 to $2,000 maybe per micro, depending on your brokerage. So there's a good opportunity there. And, to capture a lot, a very wide movement like that, that's what it's for. Like, that's where you can really kind of swing trade with micros. And I did it in 2023. I don't know what happened to me in 2024. I think I was a little busy and I'm going to get back to doing it. So that is my goal. That is my goal. Someone said $68 a barrel to 76. Yeah, it's something like that. I think that's what I remember hearing. But yeah, it could be, off to the races to 80s here with good old crude. Might have to watch There Will Be Blood. All the other ones. GC, as I said, look for something back down towards maybe the 2700s, the 2695s, 94s, I think was the other area. Yeah, this old high up there, to potentially get long for this trip and move higher. That would be the logic. That's what I'd be expecting and looking for, guys. So that is the prep. If there are no more questions, I will let you all get back to your wonderful Sunday. It is playoff weekend in the NFL. Good to see the Bills won. How about Derrick Henry yesterday? That was pretty crazy. And yeah, we got some more football tonight and a rare Monday night wild card game. So that should be a lot of fun too. So, there is one more question. Oh no, it's news. Thanks, Andrew. The latest news was oil continues to rise following new U.S. sanctions on Russian energy. That also probably explains why natural gas shot to the moon up 7% as well. So there you go. If you're wondering why we gapped up and just went in natural gas and crude oil, there you go. New U.S. sanctions on Russian energy. So that should explain at least the absurd move out of the gate. We'll see how much actually comes out of that as we get towards the actual trading session tomorrow, but it may be a week that we should all be trading energy if we start consolidating or just slow grinding to the upside for some reason and volatility dies. If they start selling the VIX, I'm jumping over to crude oil and natural gas. You heard it here first. That is the plan if we do not see real volatility in equities. I'm going to throw the Stetson on. We're going to become crude traders this week. I don't care what's going on, but that's what we're doing. All right. So that's the prep. I hope everyone has had a wonderful Sunday with me. Thank you guys for all tuning in. It's always a lot of fun. I really appreciate everybody who's hanging out and tuning in and getting a couple ideas of how we can prep, how we can attack this week. Please do trade safe this week. A lot of data releases this week. A lot of things that can stop you out, give you a bad taste in your mouth to continue to kick off this year. Volatility's back. Hopefully the VIX doesn't get sold down and ruin my day. But yeah, that's the prep. Everybody have a wonderful week. Trade safe. I will see you later this week on TopstepTV. Tune in to Coach Dakota here shortly. I'm sure he'll have an interesting perspective with what's going on as well. So thank you guys. Have a good night. Enjoy the rest of your Sunday, and I will see you in the chat tomorrow. Take care.